rupee, the fact that it already clocked a record low in yesterday's session, what is it looking like? The fact that it's been plummeting pretty much against the US dollar on a daily basis. What's going to be the impact? What are the repercussions? Let me take it across to Ashesha to get in that insight.
Well, yes, so the Indian rupee clocked an all-time low against the US dollar in yesterday's trade to close near that 88.44 mark after hitting an all-time low of 88.4563. Now remember, several factors continue to impact. One is the rupee continues to remain under pressure because of US tariffs. There is still uncertainty on the implication and whether a deal could be signed between India and US. Capital outflow from India also continues to remain heavy. Remember, continuous FII selling and FII exodus from India also is one of the factors that continues to weigh heavy on the Indian rupee versus the US dollar. Worries about India's trade prospects and capital inflows also continues to weigh heavy. And remember, this also has several repercussions across the economy. So increased inflation, wider trade deficit, weaker currency also increases import costs, especially for importing industries. Foreign capital outflows and increased corporate debt are also some of the other repercussions of rupee now falling to an all-time low. Now, if we look at and compare Indian rupee versus other BRICS nations, then over the last 1 month, Indian rupee has depreciated over 1%. This is in the last 1 month. Brazil and China, meanwhile, have appreciated 0.2% and 0.8% respectively over the corresponding period. And if we look on a year-to-date basis, Indian rupee, remember, is the only currency which has depreciated to the tune of 3.5%. versus Brazil and China, which have appreciated 3.5% and 12% respectively. So yes, Indian rupee is depreciating and it is hitting all-time low on nearly everyday basis.
Okay, so that's the take coming in. Ashesha, thanks so much for taking us through everything that is affecting the way the momentum that we're seeing in the rupee right now. Let's get a better understanding of what this means for the rupee going ahead. What could the broader implications be? We have Anindya Banerjee, the Senior VP, Head of Currency and Commodity Research at Kotak Securities, joining us this morning. Anindya, hi, morning. Thanks so much for your time. First up, my colleague Ashesha was just flagging off some factors that are marring the rupee right now. 88.4, 88.6 levels is something that we've already tested. How much further are you seeing this drop in rupee, and where do you think we could finally settle or stabilize?
A very good morning, and thank you for having me. See, the wedge in the rupee's performance compared to its peers is startling, because last time it happened was in 2013. So this is exactly the tariff situation, the outflows of FPIs, because the FPIs have been a net seller since June. Close to $4.6 billion have flown out, combining the equity and debt segments. The net FDI flows has also come down dramatically because of large outbound FDI flows. And RBI, though, have been a seller in the spot market, but their rate of intervention has come down. Because when there is a trade war, which is now happening between India and America, at that time you need some cushion which needs to be given to your exporters by way of a weaker currency. And I think that's exactly what is happening. But having said that, as I said, if you look at the peer performance, that is quite startling, because if I take the top 26 currencies and compare it against the US dollar, on average, they have appreciated by 7 to 8%. The Indian rupee is down close to 3%. So that's a wedge of 10 to 11%. Look at the US dollar index. It is down 12% from the 2025 highs. Now, so the wedges are anywhere between 10 to 14%. As I said, 2013 was the last time when we saw this kind of underperformance. But the situation, the ground situation, macroeconomic situation, political situation is way better. So once this trade dispute resolves, we can see a very sharp appreciation in the Indian rupee.
All right, that's the take for now. But Anindya, the other fact is, when we have seen such bit of a sharp fall in the rupee, I think a couple of months back, then it was the RBI that really come at the forefront and tried to protect and did take some steps in order to really hold that kind of a fall. Do you think this time as well we can see RBI actions coming in?
See, RBI, as I said, as long as the trade war is on in its current context, I don't think the RBI will be over aggressive. Yes, they will try to contain the volatility because currently it's around 88.40. If it gets to 89 or above levels, we can see the RBI come in aggressively. But we do not expect the RBI to intervene like it used to intervene, say till last year. Once the tariff situation resolves, then we can see the RBI intervene, and it can be with the appreciation trend of the Indian rupee.
Right, okay. Anindya, great for to have you on the show. Thanks for your time today.
Thank you.